Session which we had, that is the first topic of overview of companies like Mr. Ishrani, when he was discussing, there are a lot of issues on CSR, and CSR is a very important topic, and that's why we have kept a separate session on the subject. We couldn't have a better speaker than Anup Shah. Friends, those who know Anup, of this generation, I find him to be the most versatile chartered accountant. You give him a topic and he is ready. In fact, any query on the Companies Act, I think if we have besides CSR, he would be, I understand, capable of answering your queries. And before this session started, we informally were discussing a lot of issues, and he is updated on the rules which were notified yesterday. So that is Anup Shah. Before he starts his session, may I request Nitin to formally introduce Anup.
Good morning, friends. After yesterday hectic things on mergers and acquisition, today Anup is going to take us through corporate social responsibilities, and also I believe something has come on the rules also on that he is going to go. Before I hand over the mic to him, his brief introduction. He is a fellow member of Institute of Chartered Accountants of India. He is ranked 19th in final CA, clearing CA. He is 11th rank in India with distinction of 70% in CA, inter-CA. He is a law graduate from Mumbai University. He is completed his BCom from Sidman College, and he has also done BCA course of Business Consultancy Studies from Jamnalal Bajaj Institutes. His is a hand-on experience in business restructuring, capital market regulations, foreign investments, international taxations, private equity investments, real estate structuring, valuations, accounting advisories. He's co-authored many books like Handbook on Capital Market Regulations by Institute of Chartered Accountants of India, Wills, Success and Family Settlements, published by ICI, Laws and Business, up to 4 editions published by DCAs and Income Tax Advisors. He's contributed about 170 articles and papers to several publications, newspapers. He is awarded a prize for the best features in BCA Journal for outstanding research paperwork at International Conference on Commerce and Management. He gives talks at various seminars and workshops across India. He is holding an independent directorship in Ruby Mills, Claris Life Science and J Corp. He is also a member of International Taxation Committee of Chamber of Tax Consultant, and is a convener of Editorial Board and General Committee of BCS Journal. Before I hand over the mic to Anup, may I call upon Paras Savla to present the memento to Anup Shah. Thank you. Anup, please take over.
Good morning, friends. A couple of months, or I guess a month ago, when Vitulbhai called me and asked me to speak on CSR, I was wondering how much can I talk for 1.5 hours in one section. And I thought this is something which should get over in half an hour. After I ended up making a presentation, I think this would also be less. Because the kind of drafting and the kind of issues which is very become a benchmark of this Companies Act, and doing things in part, coming out with something and then coming out with something, and then even the rules, they've been drafted in a hurry, and somebody wanted CSR to be the pilot project of Mr. Pilot, and therefore it was done in a hurry. If you look at the rules also, they are full of contradictions, and as we'll see. And this is also corporate social responsibility and also socialist responsibility which has been thrust upon corporates. And therefore the question arises, is it something which was needed? I think yes, it's a good idea, but has it been implemented in the right way? I think definitely not. Is 2%, that's what I asked the question, and that's what I leave you all with, the 2% question. Is it too much? I feel yes. In fact, one of India's greatest philanthropists, Mr. Azim Premji, is on record saying 2% is a very high figure. And you may feel 2% is what? Why are you bothering about 2%? But 2% of what size are we talking about? It could run into crores of rupees for one company, and I think that's too much to be asking one company to do. And as we'll see, even if you're making losses, you're supposed to fork out 2%. So that's something which is not a very good idea. So let's go through the issues, the problems. First look at the bare text, and then also look at what are the income tax issues, because that has become the number one question. How did you get a tax benefit for doing CSR? Now, first of all, CSR was the first section to be notified with rules. What came out yesterday was the second tranche. Sometime about 2.5 weeks ago, we had the first section to be notified with rule. On 12th September 2013, we had those 98 sections which were notified which had no rules. CSR was in the next one which had rules, which was notified. It's effective from 1st April, that's Tuesday. And the corporate social responsibility policy rules have also been notified along with this section. Applies to whom? Now, this is very important to understand who is covered. First of all, it is only corporates which are covered. So only companies, no LLPs, no partnerships, and no other entities are currently covered. That's not to say that, they may not be covered in future. Now, let us look at the CSR of some of the India's largest profit-making private sector companies, and then compare it with what they would now be required to do, and then see whether they're making a deficit or actually they're spending more. Surprise, Reliance is the largest CSR spender in India, contrary to what we may otherwise think. Now, its actual CSR was 357 crores in 2013. If you take what it is supposed to spend, that is 3 years average profit before tax, 2% of that, it comes to 515 crores. That means Reliance was underspent by 31%. It will now need to incur 31% more CSR than what it has been doing in 2013. Tata Consultancy Services from the Tata House, which we generally look at India's greatest philanthropist, 72% deficit. Biggest surprise, Infosys, required to spend 219 crores, and what I could gather from the annual report, and I have cross-checked it several times, it's only 10 crores. So 95% deficit in what Infosys has spent. They might have spent more in the past, I'm not denying that, but if I'm comparing 2013, there's a 95%, so 209 crores deficit as to what they were required to spend and what they have actually spent. ITC, which has the e-Chopal, again a very good CSR initiative, it's one of the lower deficits, yet 54% in the red, and Bharti Airtel 80%. So these five together have to contribute 546 crores, and they cumulatively have a deficit of 78%. I think company after company, if you will check, will be in the red, and there would rarely be a company which has totaled or equaled or exceeded the CSR spending. Estimates are very wild. The press is having a field day. You have estimates ranging from 10,000 to 30,000 crores per year. That's the CSR being projected. Let's look at what it could realistically be. This is my guesstimate, okay? 2013 net profit after tax of the top 1,000 listed companies. Multiply that by 2%, you get a figure of 6,800 crores. 2013 net profit after tax of the top 200 unlisted companies. Multiply that by 2%, you get a figure of 720 crores. Total of this is 7,500 crores. Mind you, CSR is your net profit before tax. This is net profit after tax. Add to this the CSR from private limited companies. I think 10,000 crores plus 2,000 crores here, there should be a realistic figure. So you're looking at about 10 to 11,000 crores of CSR spending per annum. That's a very, very large figure, which is being mandatory thrust upon companies, whether you are private, public or listed. Again, top 1,000 companies, 874 of them are covered under the CSR criteria. Top 300 unlisted public company, 296, only 4 are left out. And private limited, we don't have data, so it's not very easy to look at. So if any one of 3 conditions are met, you are covered within the gamut and ambit of CSR. So let us look at what these 3 conditions are. This is similar to, we used to have the return filing 1/6 criteria, if you all remember. This is similar, you have 1/3 criteria. Any one, you are covered. Turnover of 1,000 crores or more, net worth of 500 crores or more, and net profit of 5 crores or more. So when you are talking 1,000, 500, you yet have some small guy, 5 crores lurking somewhere. That's net profit, which is the biggest devil of the lot, because most people are going to be covered because of that. Interestingly, these terms are not defined in the CSR rules or in the CSR section. So we need to look at whether the Companies Act defines these terms. First two are defined, last one, which is the killer, is not defined anywhere. What is the meaning of net worth? So you need a net worth of 500 crores or more. The Companies Act section 2 defines net worth to mean share capital plus reserves emanating from profits plus securities premium minus debit balance in the P&L account minus deferred expenditure minus miscellaneous expenditure. So this is what we generally more or less understand as the definition of net worth. There is an added explanation that it excludes revaluation reserve for obvious reason, because revaluation is not out of reserve, out of cash, not from profit. It is generally considered to be a fictitious reserve. Amalgamation reserves, any reserve created on virtue of merger of another company with you, even that needs to be excluded. And any depreciation write back, so if you provided excess depreciation and there's a write back of that, even that is to be excluded in computing net worth. Now this is a general definition of net worth in the Companies Act and will apply even for the CSR, because CSR has not come out with its own definition on what constitutes net worth. Turnover 1,000 crores or more. Now here again section 2 defines turnover to mean aggregate realization made from sale of goods, supply of services, or both in a financial year. Again, so it could be sale of goods, supply of services, or both, and both should be in a financial year. What about adjustments for trade discount, bad debts, and excise and VAT? How do you deal with that? Do you include them? Do you exclude them? I believe adjustments for discounts and bad debts should be done, and you should look at the figure after that. And correctly, the better way to show it, and this is what even the Institute's guidance note on VAT accounting says, is to show it in the exclusive method, that is show VAT separately and show turnover separately. But if you are charging an inclusive price, then turnover would be inclusive, and then in that case even excise and VAT would be included in counting 1,000 crores. So how you account for it may in fact push up your CSR or may take you out of the CSR ambit. Net profit, the most important of the three. Is it net profit before tax or after tax? Very fundamental $1,000,000 question. No answer. I believe that it should be net profit before tax, but there could be detractors. The draft rules said net profit before tax. Final rules, for some reason best known to them, have omitted it, and we know why they omitted, to create more ambiguity. Net profit computed as per financial statements, but excludes two things. This is what they expressly provide. Profits of foreign branches, so if you have a branch anywhere, you don't include that profit for CSR purpose, and dividend received by an Indian company from another company to which CSR applies. So if you need to find out which of the companies from which you have received dividend is caught within the CSR ambit. If it is caught, then exclude the dividend which you have received from that company while working out net profit before tax or after tax. If you look at the guidance note on tax audit issued by our institute, it defines the term net profit to mean net profit before tax. That plus looking at the draft rules, I think it should be net profit before tax and not after tax. One important question which again needs to be examined, what do you do if there is any auditor's qualification? Do you adjust these figures, or do you just take them at face value at what is stated in the balance sheet or P&L? Auditor says that you have booked a revenue which should not be booked. Do I make an adjustment for that for working out CSR? I think that's something which we need to go forward and look at, but looks like that you have to take figures only on the balance sheet or P&L value and not make any adjustment for what the auditor has made a qualification. Some examples of how companies could be covered. Say you have a company 1 which has a net profit before tax, and for our discussion let's keep it at before tax everywhere. Net profit before tax of 6 crores, turnover of 60 and net worth of 500. It is covered on 2 counts. Profit is more than 5 crores, net worth is more than 500 crores. CSR is applicable. Company 2, net profit 4 crores, so not covered. Turnover 900, below 1000, not covered. Net worth is 400, of which revaluation is 300. So in this case anyway net worth is less than 500, so not covered. But assuming it was 500, in this case yet it would not be covered because revaluation also needs to be excluded. So then the net worth would be 200 or 100 depending on which would be the case. Company 3 is a real estate company. Now here you have the guidance note of 2012 issued by the Institute on Revenue Recognition, which allows you to postpone revenue recognition even on a percentage completion till 3 conditions are met of cost of construction, agreement for sale and realization from those agreements for sale. Now assuming you have not yet reached your threshold for revenue recognition, then my turnover would be nil. My net profit obviously will be nil. I just have a net worth which may be share premium and which may be capital. In such case, till my revenue is not recognized and I don't reach the criteria under the CSR guidelines, read with my ICAI guidance note, I don't need to provide for CSR. So that's something which real estate SPVs may find it beneficial. And company 4, this is an interesting scenario. Profit before tax 5 crores but profit after tax 4 crores. Not being covered under the turnover or the net worth criteria. Is he covered? Is such a company covered? Now that depends on what interpretation we take, whether profit should be PBT or PAT. If we take PAT, he is out of CSR. If we take PBT, he is in CSR. I believe, as I said, it should be PBT. Profit before tax. And as we will see elsewhere, for computing CSR, they expressly said PBT. And the draft rule said PBT. The ICAI guidance note on tax audit says net profit means PBT. I believe everything said and done, it should be PBT. But that's something where we should hope for a clarification, as they are known to be doing. Removal of difficulties order, as they popularly call it. So
the CSR will be on top of tax.
Oh, of course.
33% plus 2%.
I didn't get the top of tax. Whether it would, are you asking whether it would be tax deductible or not?
There is a tax payment and there is a CSR payment.
Yes, they are separate. This is not a tax.
And it will be before tax, it means again it is sitting on top of it.
Yes, but whether it will be deductible or not is another question, which will come towards the end of the presentation.
Deductibility will be covered by Section 34.
But it's not that clear cut. In fact, the earlier rule said that, the draft rule said that CBDT will prescribe guidelines for tax deductibility. Final rules have done away with that.
Politicians will approach the company that will contribute at
Now these thresholds are to be examined during a financial year. So say I have a net profit before tax for period ended 31st December 2014 at 5 crores. In my last quarter, I make a loss, which drags my PBT down to 4 crores. Is CSR applicable for 14-15? Now, should I look at it at any point of time or should I look at it at the end of the financial year? The words used are during any financial year and not at during any point of the financial year. Hence, in my view, the turnover and the profit should be looked at the end of the financial year, that is on 31st March 2014, 15 in this case, and not at any point of time. So if during the year you cross, that's okay, but at the end, if you are not crossed, then you will not be covered. And this is something again on which there is no express clarity. I am expressing my view. I believe it should be at the end of the financial year. If you cross 5 crores or you cross 1,000 crores, only then you are covered within the ambit of CSR. What about net worth, which is on a given date? Because net worth is not for a period, it's on a given date. Do I look at net worth as on a date or do I look at again net worth on 31/3? Now if I look at profit on 31/3, it stands to reason net worth also should be on 31/3 because you will include the profit in that net worth computation. Hence in my view, all three should be examined at the end of the financial year. Only then would you be covered. But you need to keep a tab on it because you obviously can't start spending on 31st only. When you come to know on 31st that I've reached 5 crores and now I need to spend everything in the next few hours. That's not going to happen. So you going to need to have a call. The problem will be in those cases which are on the borderline. Do they spend or do they not spend? In a case where they don't actually want to spend but they are being forced to spend. So say I'm at 4.5 and I don't know whether I'll touch 5. Then do I start spending or then on the last day do I just go and give a check to the Prime Minister's Relief Fund and end of matter? So that's why they've given the Prime Minister's Relief Fund escape route, that when all fails, he is the lender of the last resort.
Ideally, spending should in the next year.
Ideally it should, but then the thresholds need to be revised to say preceding financial year. They are saying that any time during the financial year. So they are not, for computation of average net profit they have looked at preceding, but for spending threshold they are saying current. So that is right what you are saying. Now CSR criteria. This is a question which has often been asked. Is it a one-way street? Only exit, no entry. Only entry, no exit. Once you are covered forever. Answer is yes, but there are certain escape routes. Once you meet the 1/3 conditions, is CSR applicable forever? If threshold is breached during any financial year, CSR is applicable forever. There is no exit. But there is a gateway in two situations. Once covered, there is a relaxation if you do not meet these 1/3 conditions for 3 consecutive financial years. So if for 3 consecutive financial years you neither comply with turnover, nor with profit, nor with net worth, then you don't need to meet the CSR conditions. Or if your average net profit on which you pay 2% is a loss, then obviously you don't require to pay CSR. Otherwise, if supposing in this year I have a loss, but my average net profit is a profit, then I'm yet supposed to contribute to CSR. So that means I increase my loss. So this year I made a 1 crore loss, but because of past bounties, my average net profit for 3 years is 5 crores. I yet have to contribute 2% of 5 crores and increase my 1 crore loss to buy that. So that's a very, obnoxious provision. How can you ask a loss-making company to do charity? So let us just look at an example of this. There are some errors in the handout which you have got. So we will give you the correct one. This is the right one. So say 2014-15, because that's the first year. Profit before tax, just the first column, is 5 crores. Turnover is 50 and net worth is 100. Is it covered within CSR? Yes, because profit has exceeded. 3 years average profit is 4 crores. What is the CSR? 2% of 4 crores, 8 lakhs. Next year, I make a loss and I'm not covered within any of the 3 conditions, because 4 crore loss, 20 crores turnover, 100 crores net worth. Yet I have to pay 2% of my average net profit, which is 4.66. So I have to pay 9 lakhs CSR. So my 4 crores loss goes up by 9 lakhs. Third year, again same scenario, but yet my average is a positive figure. So I pay 2% CSR of that is 3 lakhs. Come to the next, that is 2017-18. Here there is a 2 crore loss, turnover is 10 and net worth is 96. Here my average is also negative, and if I look at it, for 3 consecutive years I have not complied with conditions, hence no CSR. Same in the next year, and in the third year, although I am covered within the CSR because my profit before tax is 6 crores, because my average net profit is a loss figure, that is 2 crores negative, I don't pay any CSR in that. Again in the year after, that is the final 2020, I am back to paying CSR. So in 2 scenarios I have an escape route. Either I 3 years consecutively get out of the 1/3, or my average net profit on which I have to compute 2% is a negative figure, in which case again I don't pay 2%. So any of one of 2 you meet, or both, you are out of the purview. CSR is mandatory for a company, its holding company, its subsidiary, its joint venture and its associate. All those companies, whether they are part of a group or not, which comply with the conditions, required to comply with individually. And they can't say just because my parent has complied with, I am out of the purview. Mahindra & Mahindra has 143 subsidiaries, joint ventures and associates, most of which I think would be covered. So in that case, they all can't say M&M Limited is doing CSR, hence 142 will be out of it. No, all of them will have to go through the 2% route, and they can't look at a group net worth. They can't look at a consolidated net worth, consolidated balance sheet. They have to look at it on a standalone individual balance sheet, provided they comply with the 1/3 condition. Next important thing, who implements and takes responsibility for this? So it's the CSR committee. Yeah.
In 15-16, why did you pay over 9 lakhs of CSR?
Excuse me. 4.66 average 3 years net.
Net worth is below 500 crore.
Yeah.
my turnover is...
I am outside the purview, but yet my average net profit is a positive figure. Yet I have to pay. Because once covered, always covered till your average net profit is a positive figure. Three criteria are actually given. Fourth one is by de facto. Because there is no exit. That's what I said in the beginning, that even if you are a loss-making company, you have to pay. So my loss goes up from 4 crores to 4 crores 9 lakhs, which is a totally ridiculous scenario to be looking at. And that is exactly what Mr. Premji was saying, that in a time when India is going through recession, when so many companies are making losses, you are thrusting your socialist responsibilities upon us. So it's not social responsibility, it's socialist responsibility.
Yes, average profit you have calculated over the past.
Past also, yes. The first block will be 11, 12, 12, 13, 13, 14. So starting from 1st April, the block will be 11, 12, 12, 13, 13, 14. So I have taken that into account, yes. Not current years, preceding 3-year block. It's like block assessment. Only 6 has become 3. So now you need a CSR committee. So that's to implement the CSR guidelines. First, the committee should be constituted from out of the board of directors. So only board of directors could be on the committee. You cannot have anyone else with CSR. The rest could be vice presidents and all who could be assisting the committee. But the committee must comprise only out of the board of directors. One independent director is a must on the CSR committee. You can have more also. And the report of the board of directors must disclose the composition of the CSR committee. Now, if I am an unlisted or a private limited company and I have no independent director requirement, then how do I have a CSR committee? Because I am yet covered within CSR. Here the rules now specify that you can have a CSR committee without an independent director. This is again another example of delegated legislation overstepping the legislation. When the Act says you need an independent director, how can the rules provide a relaxation? But of course it's something beneficial, so who is going to complain? It's, the company is not going to complain, the ROC is not going to complain. So who has a grievance? It's only somebody who's an academician like us sitting in a conference like this who would say that how can you have delegated legislation overstepping? But otherwise, if you go to look at it, how can rules take away something which the Act mandates you to do when the Act does not give you the power to do so? What if you are a private company which has only 2 directors, but the section requires you to have 3 directors? Here again rules say you can have a CSR committee with only 2 directors, you don't need to have 3 directors. Can I have a CSR committee only of independent directors? Answer is yes, because it says only minimum 1. But the question is, if you have only independent directors, who will carry it out into effect? So it's always advisable to have at least 1 whole-time director or managing director to carry it out into effect. You can have more than 1 ID, but better have at least 1 whole-time director on it. What is the role of the CSR committee? FRM. Formulate, recommend, monitor. Formulate the CSR policy out of the specified activities. Recommend the expense to be incurred by the company on the CSR activities. And monitor whether the expenditure is being spent in accordance with the CSR policy of the company. This is the role of the CSR committee. Formulate, recommend, monitor. So they need to check and first think of a plan, then recommend to the board will take a decision and then ultimately monitor whether it is in accordance with the policy. What is the CSR policy? It relates to activities specified in Schedule 7. Schedule 7 to the Act specifies the CSR activities which a company may pursue under Section 135, and the expenditure is to be incurred on the same. It must include the following: the list of CSR projects or programs. CSR could be in the form of a project or it could be in the form of a program. So water sanitation could be a project, because once you achieve a project, it's over. But a program could be long duration and could be continuing. Preventive healthcare, that's a program because it goes on. You continuously need to do preventive healthcare. But drinking water project, once you've achieved that, then only you need to take care that it continues to remain drinkable. Otherwise, there are several rural areas which don't have any access to drinking water. So that's one CSR project which you can undertake during the year falling within Schedule 7. modalities of execution in areas and sectors chosen, implementation schedule for the same. It's very important to have a time-bound implementation schedule, and that's what the policy must lay down. Monitoring process, how are you going to monitor such process, project and program, and specify that any surplus from CSR will not be profit of the company. So this is something which comes up again and again in both the accounting requirements as well as in the CSR policy rules, that any surplus you earn from CSR does not become your profit. So you can't make money out of charity. Charity begins at home, but you are not a beneficiary of that. The board must ensure that the CSR policy is related to activities included in Schedule 7. This is a very important statement. Looks very innocuous, but it has a very deep-rooted meaning. Ensure that the CSR policy is related to activities included in Schedule 7 means you cannot take any other activity other than the 10 activities specified in Schedule 7. There is no flexibility for the board to think of an 11th activity which is not there in Schedule 7. And in the next couple of slides, I'll show you how the minister all throughout was harping that there is a very flexible policy and the board has discretion to decide what it wants, but the reality in the rules is totally different from that. Now the question arises, what do I spend my CSR activity money on? Schedule 7 lays down the specified CSR activity, and the schedule states activities which may be included in the CSR policy. What does that may be means? You have a discretion, you can select others also. Are the activities mandatory or are they illustrative? Can I spend on activities which are not included in Schedule 7 but are yet corporate social responsibility activities? This is what the minister has said at ASSOCHAM, at FICCI and at CIA. The board is to have discretion and the norms would be as open-ended as possible as the company deems fit it can spend. This is at a time when the CSR draft rules were only in place, the final rules were not in place. This is his statement and quote unquote, I can't be more liberal than that. Companies can spend as they deem fit. If you look at the rules, nothing of this sort is contained in that. CSR definition in the rules, it means and includes but not limited to activities under Schedule 7 as per the CSR policy for activities as per the schedule. So means and includes but not limited to. So this does give flexibility and is in consonance with the statement given by the minister that you have flexibility to decide any other activity. Next subsection says CSR expenditure is defined to mean excludes expenditure on items not under Schedule 7. So, first definition gives you power to decide what you want. Second says anything you spend on other than Schedule 7 is not CSR expenditure. CSR policy definition, which is in section Rule 21F, activities to be undertaken by company as specified in Schedule 7. So again, no discretion. And Rule 7, which is very important, Board of Directors must ensure that the CSR policy is in line with activities in Schedule 7. Is this liberal or restrictive? I leave it to you all to decide. I do not find it to be liberal by any stretch of imagination. It is entirely restrictive, saying that you are bound by Schedule 7 only and there is no discretion. I think it's time for a clarification from MCA again, removal of difficulties order, and again we'll have something coming out that this is not what we meant this and therefore you have discretion. But as the law stands today, there is no discretion according to me, although CSR definition is wide, but when it says under Schedule 7 as per CSR policy. So that means you go to the definition of CSR policy, which says activities to be done as specified in Schedule 7 and CSR expenditure excludes anything other than under Schedule 7. Looks like it is restrictive. It does not give you the flexibility to go to an 11th activity which is not covered in Schedule 7, which is quite bad. Why should you restrict it only to these 10 activities? There could be other activities also.
The main thing is the requirement, the local requirement all over India may vary. I
agree. Best judge to decide. Yes, I agree.
In the Charity is not restricted to 10 areas.
Exactly. Let us look at the activities which are there, the 10 activities. Now earlier, it's very interesting, the Schedule 7 was prescribed under the Act. So it was enacted by an Act of Parliament. The Ministry of Corporate Affairs has changed the schedule. This is again a classic example of delegated legislature overstepping its boundaries. When something is done by an Act of Parliament, the only way to amend it is to go back to Parliament. Ministry has no power to change it. It's like Parliament shot a bullet and Ministry wants to alter the course of it. Sorry, you can't do that. The only one who can alter it is the one who shot it. So you can't alter the schedule. These guys have gone and amended the schedule which was enacted under the Act. It was not under the rules. It was not notified by the Ministry of Corporate Affairs. It was part of the Act which was passed by the Parliament and approved by the President. And yet, sometime in February, the schedule itself has been amended. The entire schedule has undergone a change and a lot of activities have gone away altogether and some have been modified. So what I have done is compared the new Schedule 7 with the old entry in the schedule or the old entry in the old schedule and given my remarks on whether it's a good move or a bad move. The new,
Whether it can be challenged.
it can be, definitely. That's what I'm saying. It's a classic case of delegated legislature overstepping its boundaries. It can be and should be. Definitely be challenged. But the only forum would be to go to a high court by a writ petition. Eradicating hunger and poverty, malnutrition, promoting preventive health care and sanitation, and safe drinking water. So all these form part of one entry. The old schedule said eradicating extreme hunger and poverty. So the word extreme is done away with. Now you can eradicate even a low element of hunger. Poverty remains. Malnutrition has been added, which is good because India suffers from a lot of malnutrition. Promoting preventive health care, that is a good move. And sanitation and safe drinking water. These are two areas where India is very deficient, sanitation and safe drinking water. So that's a good thing. Promoting preventive health care becomes important for pharma companies. If they go and distribute their medicines and medical equipment free of cost, it may be an indirect booster to their business, which is also permissible. And we'll look at a case of Rainbakshi doing a similar thing. So this is a good idea of including preventive health care along with other sanitation, water and other projects. Promotion of, now the next entry, promotion of education, special education, vocational skills amongst children, women, elderly, differently abled, promoting livelihood projects. Earlier it was more generic, now it's become more specific. Promotion of education and employment enhancing vocal skills. Now they're saying amongst children, women, elderly, differently abled. Only question arises that if I go to do it amongst men who are not differently abled, will it be CSR or not? I think it should be. It's only empowering you to empower women because women's empowerment is now a favorite word of the current government. So therefore it has been added afterwards. But otherwise I believe if you go to do a vocational skill for a male, that should not be out of the CSR activity, although not covered amongst any of these special categories. Two activities have been now clubbed together. Education and IT companies can contribute a lot to these activities because they can carry out computer education programs. So you have a company like Educom. So it could go and run a CSR activity for rural children for computer education, or you could have an IT company like NIIT running some programs. So that is an example of CSR which they can do. Again, promoting gender equality, empowering women, setting up homes for women, orphans, old age homes and measures to reduce income inequalities. Old schedule provided promoting gender equality, so that was same, empowering women, but the old age homes and orphans and measures to reduce income inequalities were not there. Contributing for homes for women orphans, something which reality companies can look at as a CSR activity. So it becomes easier for them to carry out such construction and old age homes and it could be treated as a CSR on their part. Something for the environment, ensuring environmental sustainability, and that was always there. They've added more specific items, welfare of ecological balance, flora and fauna, animals, agroforestry, natural resources and quality of soil, water and air. Here it defines the same term more explicitly, otherwise if you look at it the generic item was wide enough to cover all of these. This could be useful for hazardous and pharma companies and chemical companies who otherwise are polluting companies to look up something for environmental sustainability. New entry which was not there earlier, which is good move, protection of national heritage, art, culture, restoring buildings, historic sites, art, setting up of public libraries, promoting traditional arts and handicrafts. This was not there earlier, so they want you to, even if you look up something like, restoration of Jahangir Art Gallery, so that could be a CSR initiative, or promoting the Kalagoda Festival, it's a traditional art and handicraft, so that could be a CSR initiative, and something which media and entertainment companies could use up more, because it also leads to indirect publicity. What companies should or could look at is that the CSR is in line with their profile, so it looks at something which also leads to brand building. So if you have a pharma company promoting an art and handicraft, although it is CSR, it does not that much give you mileage as a media company promoting art and handicraft, so it does give you a mileage also. So that is something which companies would now have to look at, how to weave in CSR with their corporate image, with their corporate branding, and then get some mileage in an indirect manner. Measures for the benefit of armed forces, veterans, for widows and dependents. Very good move. There's very little done for the services in this country, service sector, that's the security forces. So this is something which has been covered. Defense industries may like to look at it. And this is an important one which was added, which I kind of fail to understand what it means. And it's something which all of us should consider. Training to promote rural sports, national sports, and Olympic and Paralympic sports. Anything spending on sports is always welcome, because we are not a very sporting nation other than cricket, so we don't promote any other sport. But training to promote sports means what? You want marketing executives or you want sportsmen? So then you should say promoting sports, not training to promote sports. You don't train people to promote sports. We're not looking at creating medical representatives who go and promote sports, that type of a thing. So training to promote does not have any meaning according to me. It should either mean spending on promoting sports. So if I sponsor a hockey tournament or I sponsor a volleyball tournament, that should be treated as CSR, not training someone to promote the hockey, so then he goes and becomes a marketing executive. I don't think that is what is meant, but that's what the wordings are used.
Maybe they are referring to training institute for sports.
But then they are not referring to any association like ATG says, an institution or an association set up for promoting sports. Why not just sponsor a sporting event? Why keep it very restrictive? So and they've nicely included rural sports, which are not currently getting the kind of attention. Now you have the Kabaddi League and all these coming up. Why can I not look at something of that sort also? Promoting a village tournament, that could be a CSR activity, but it only requires you to train them. So then only, associations may be covered within the purview of that. Good old contribution to Prime Minister's National Relief Fund or fund set up by central government for development of SC/ST, minorities and women. So you just contribute to the Prime Minister's National Relief Fund and you are done with your CSR responsibility. We'll come to that after some time. The old schedule included the same, but included funds set up by state government. So now state government funds are not covered any longer. Now here is a nice story to it why this is not done. The Chhattisgarh government, the moment the CSR Act came out and the draft rules came out, issued a policy, not a suggestion, it was a policy. Anybody who sets up a mega or an industrial policy in Chhattisgarh and who gets a grant or special benefits from the Chhattisgarh government is compulsorily required to give a CSR to a state government fund set up for that, and the CSR limits were even higher. 3% of net profit if your profit is less than 500 crores, 2% of net profit if your profit is more than 500 crores. You cannot carry out CSR in any other manner otherwise than to contributing through the Chhattisgarh government fund. And they issued a rider that if you don't, all policy benefits and grants will be withdrawn. So this was obviously not what was in mind, and the central government MCA even wrote to the Chhattisgarh government. It took a law ministry's opinion, and it was thought that this is not correct. We want people to develop CSR capabilities and not forcibly pay only to a state government. Hence in the schedule which is now the state government fund has been taken away. So now this policy from the government of Chhattisgarh needs to be seen whether they would revoke it or they would yet continue and say you pay separately under the Companies Act and separately here. So that's something which we need to look at how they would act on that. Contribution to technology incubators in central government approved academic institutes. So if IIT or any technology institute were to set up a incubator fund, which is very common in the universities abroad. So you have Harvard incubator funds and you have Stanford incubator funds. Similar funds in institutes which will be notified by the central government if you contribute to, that would be a CSR. And the last is rural development projects. Good move, because rural development is what is needed. So any rural development project would be treated as a CSR activity. What is removed? This is the shocker. We had an entry in the old schedule reducing child mortality. According to UNICEF, which is a UN authority, India has #1 status in child mortality. Our government thinks we have achieved zero child mortality. Our child mortality rate is higher than the next 4 countries put together. In such a scenario, what was earlier treated as CSR is now not treated as CSR. And now the rules say that anything other than the 10 we looked at is not CSR. That means if I want to spend on reducing child mortality, if I'm a pharma company or a healthcare company in this business and I want to spend on this, I'm not allowed to spend. Doesn't make any sense. Combating HIV, AIDS, malaria and other diseases. This was a CSR activity under the old schedule, removed from the new schedule. India is the disease capital of the world. We are #3 in AIDS and HIV, #1 in malaria in Southeast Asia, #1 in heart and lung disease internationally. What is our government thinking, that we are a zero disease capital? Are we a Scandinavian country where we don't have any malaria or we don't have any heart disease, and yet not to allow companies to contribute to these activities makes absolutely no sense. So this is something which urgently either make the policy flexible and allow us to do anything we want, or include all of this, because this is something which is the need of the hour. Preventive healthcare, yes, but combating, no. So if I prevent it, it's okay, but if I treat you, it's not. And more often than not, it's a case of treatment, because in the rural area, etc., it's already too widespread. Social business projects was considered to be the #1 route for CSR by which companies were going to carry out their activities. And we'll look at a separate slide on that, and such other matters as may be prescribed, which has now been taken away. So now no more prescription, this is it. Combating diseases has been taken away, and you'll be interested to note that when the schedule came out, immediately a writ petition has been filed in the Delhi High Court by a minor, Mohammed versus Union of India, challenging the fact that combating disease has been taken away. This person suffers from a very serious kind of unique disease which is very high in treatment, and he said a lot of pharma companies were interested in treating patients like him by giving free medical aid, etc. Now they will not be able to do. His monthly expenditure is in the range of 7 to 10 lakhs, and now he will not be able to incur such expenditure. He's a very poor person. So he said the pharma companies will also think twice, because it's not CSR any longer. Why did the government take out combating diseases from the purview of the CSR schedule? And the Delhi High Court has made the Ministry of Corporate Affairs a petitioner to it. The last hearing was there yesterday, where the matter has yet been adjourned, and the Bar Association of Delhi has contributed some funds for his treatment, but MCA has yet not replied on why they have removed it. So this is a case which should be monitored quite clearly. It's a minor Mohammed versus Union of India, Delhi High Court, and it will be interesting whether the Delhi High Court strikes down the schedule saying it is ultra virus acts, because the original schedule provided and you have deleted it, which is a case of delegated legislation. So what you are asking has already been challenged in the court of Delhi High Court. Same, I believe, would be the case with social business projects. Now, this was the heart of CSR, and if you look at the microfinance revolution, it is nothing but a social business project. What do you mean by a social business project? It is a for-profit business model. So there, generally in charity is considered not for profit. Here they want to do profit, but it is owned by the poor and the needy. So the profit goes to those who need it, not to those who are in greed, those who are in need. So it leads to income distribution, inequality reduction, and that is how this microfinance revolution took up in the first place. Now it has become a very dirty word, but earlier MFI, the whole idea was set up a for-profit social business project where the poor get the money, poor are distributed the dividend, and that leads to reduction in income inequality. That is what CSR was supposed to be also. That has now been done away with by the new schedule. Again, I believe it would be challenged in a court of law because this is something which a lot of companies were looking at doing their CSR through. But this is, till we hear a writ petition on this, we don't have it in the current schedule. Which activities are excluded? Activities abroad. Charity begins at home and ends at home. You can't go out of India and do any charity. Those which benefit only employees and their family. They can also benefit, but they cannot only benefit. So do not mix charity and commerce. It must be have a separate clear-cut boundary. Amount paid directly or indirectly to a political party. All political parties are considered to be uncharitable and therefore no charity to them. That's a good move. Otherwise we could have had directly or indirectly. Now it depends on how many levels they would look at, etc. Activities in the normal course of business of the company. Be charitable and indulge to everyone other than thyself. This is one of the statements of the Bible. So, what they are saying is don't do charity to yourself. So you cannot be something in your normal course of activity. But it can indirectly benefit you. I'll give you an example. Hindustan Lever has launched a campaign for washing hands. You'll see a lot of ads, that wash your hands before eating, wash your hands and create sanitation, etc. Now this indirectly promotes hand wash. This indirectly promotes soaps, which Hindustan Lever is the leader in selling. That is okay. But it cannot say that, Hindustan Lever soaps only you buy or this only you do. So you need to be subtle in your CSR. You have to work out a middle of path approach. Some indirect mileage is okay. It could indirectly benefit you, but it should not be only benefiting you. Yeah.
Example of a realty company, 13 old age home, covered the CSR. A realty company comes up with a scheme where a stock of the flats constructed in a society are given at a concessional rate to the elders. Do you think it would be hit by this law?
I think it would, but it would yet benefit yourself. If you give it free, then it's okay. See, the Maharashtra government is now forcing you to do CSR in real estate companies. They say if a plot size above certain sector, 20% must be reserved for affordable housing. Now that 20%, if you want to give it free, then it is CSR. So state government is empowering you to do CSR in a way.
That are not free.
That is not free, but if you give it free, then it is CSR. No, because it removes combating disease unless it is preventive healthcare. So if you give vitamins at a discount, then it is preventive healthcare. No, but that is not preventive. See, children's vaccines, which are preventive in nature, that would be CSR. But for adult vaccines, which are not preventive, but which are as a treatment, that would not be because they removed the clause for which the case is before the Delhi High Court. So what combating disease, that was a very important clause for pharma companies, that you give vaccines, you give medicines, you give implements, you give stents. A lot of Johnson & Johnson gives a lot of stents for angioplasty as free, that is CSR. Now that would not be covered, because that's not preventive. You can't go and get an angioplasty as preventive.
Giving at a discount, it is fine. Would it be given only free or?
Well, it is benefiting you if you give it at a discount. The same analogy what he asked about the house, it's the same thing. So I think only if it is free would it be CSR, because then you are benefited at least to the element of the amount which you get. So free, see, charity means free. You don't get any benefit out of it. Where do I spend it? Answer is only in India. Even if you have operations internationally, you cannot spend it internationally. So Bharti Airtel may have a large presence in Africa, and Africa may need more CSR than India, but you cannot spend in Africa. It has to be spent in India only. Preference is to be given to local area and areas around which the company operates. What does this mean? Does it mean local area of company's registered office? or each of the operational units of a multi-locational company. So I am a company like HLL again, which is spread all over India, but my headquarters are in Mumbai. Do I give preference only in Mumbai area, or do I go each operational unit? I believe each operational unit should be given the flexibility, because obviously, and if you are headquartered in Mumbai in Nariman Point, that is not where you need CSR so much, whereas if you are operating in a rural area in eastern India, that is where you may need actual CSR. So it should be each location and there give preference to local areas. That's how I would look at it. But again, nothing expressly for or against. How much to spend? That was my first slide question. 2%. Minimum 2%, huh? It's not maximum. CSR spending currently 2%. You may again come out with an amendment and make it more. CSR spending at 2% of average net profit of company in preceding 3 financial years. So the question which somebody was asking, preceding 3 financial years. Even if no profits in current year, this was also a question which somebody asked. So even if you are a loss-making company, if your average net profit of the preceding 3 financial years is a positive figure, you yet continue to spend. For 14-15, your block is from 11 to 13, 11, 12, 12, 13, and 13, 14. Manner of computing average net profit is specified here to mean net profit before tax. Here they have specified it. When we went to the threshold in the first few slides, I said I don't know the answer. Here it is expressly specified as net profit before tax, but in thresholds no specification. If I made a shortfall last year, do I need to make it good this year? If yes, then do I need to make a provision for that last year? There's no clarity, and I don't believe you need to make good last year's shortfall this year, because the law does not require you to do that. It's not a continuous that you need. Every year is separate, and therefore I believe each year on its own. How do you compute average net profit? This manner of clarity is not given when we look at net profit for the thresholds. So when we look at the 1/3 conditions, they are not specified this should be followed. Only for computing average net profit, they are given the detailed methodology. You start with net profit before tax, deduct and exclude the following: any foreign branches profit, share premium or profit on forfeited shares, capital gain from the sale of undertakings. So if it is an undertaking and you made a capital gain, then it is to be excluded. But if it is not an undertaking and you made a capital gain, then it is not to be excluded. Gain from the sale of immovable property, fixed assets, except if held as stock in trade. So if a developer starts excluding immovable property sale, there will be nothing left. So other than developers, any immovable property, fixed assets sold, that is to be excluded. Profit on measurement of asset at fair value. So assuming fair value accounting were to come in this country, then you don't need to count that for CSR computation, thankfully. Working charges, directors' remuneration, bonus or commission paid to any employee. Dividend from a company also covered by CSR. Interest on debentures issued. Interest on mortgages created or loans created. Depreciation and bad debts. Excess of expense over income to the extent not set off in the past. And damages payable for breach of contracts. All these are to be excluded while computing the profit for the 2% condition. So while you are computing average net profit, in each year reduce these and then arrive at your profit. Add the 3 years, divided by 3, you will get your average figure. On that, pay 2%. Don't exclude or include normal income tax, cess, surcharge. So start with PBT. Damages paid voluntarily. Capital loss on sale or demolition of undertaking. Subsidy received from government or quasi-government authority. And loss on revaluation or remeasurement. All these are not to be excluded. Now, average net profit of 3 years. What if I am in operation only for 2 years? And my average net profit then is not for 3 years. Do I count for 2 years? I believe when they say 3 years, then it should be 3 years. Hence, then in such a case where I am less than 3-year-old, CSR should not apply. But then that is again a view which I'm sure the government will come back hard against. But I believe if you are less than 3 years old, 1 or 2 years old, you are not covered by the CSR condition, because then your average net profit computation itself fails. 3 years are not there, and you cannot then say that then they should have said average of 3 years or part thereof. They have not used the words part thereof. Therefore, it has to be 3 and nothing less than 3. Yes, that's what I believe. Yeah. Yeah. It should be that. Excess of expense over income to the extent not set off, brought forward losses. Yes, so you'll have to look at it. If there are any carry forward losses, then you can get cognizance of that. Yes. No, take for 11, take for 12, take for 13. Now if there is any loss in 11 which you have not set off, then you, while computing, you can set it off.
After arriving at the average profit or loss,
but I don't see, actually this they have referred to from 198, which is for managerial remuneration computation. Hence, it does not make sense when you're looking at a block. There would never be such a scenario unless it relates to a expense of the last year or something of that sort, which is carried forward. Like in 13, if you are carrying forward something which is not covered, then you will get a cognizance of that. Otherwise, every year is separate, and when you take a total and average it out, then nothing else will be required after that. But they referred to 198, which is managerial computation, which is standalone per year. There is no concept of a block period. Hence, because you are referring to something else, this scenario does arise. Otherwise, in working out, it should not happen. Can a company spend more than 2%? So somebody is in a very charitable mode and he wants to spend more than 2%. Yes, 2% is a floor, not a ceiling. Would the excess be treated as charity? Now here we have section 181 of the Companies Act, which says, of the Companies Act 2013, which is already in force from September, which says that if you spend anything on charitable and other funds, then you require prior approval of the company by way of a general meeting resolution. I believe that does not apply to CSR spending, because CSR spending is a specific section provided under 135, whereas 181 looks at charity which is other than CSR. But if I do anything more than 2%, then the excess is charity, which may be covered or should be covered under 181, and hence that excess would require shareholders approval if you spend more than 5% of average net profit for the 3 preceding financial years. Contribution to charitable and other funds can be undertaken directly also and need not be always to way of a fund. Now, how do I spend?
more than 2%, can I carry forward to next year?
No.
Suppose a setup of people.
Yes.
Usually I may have to spend huge amount.
Yes.
And the subsequent running cost may not be that much high.
Correct.
In that situation, whatever I was paid earlier.
No, you don't get a credit for past.
Prepaid seat.
No. Because every year you have to look at your 2%, and the board is supposed to comment and contribute every year. So you don't get credit for past, and if you spent less last year, you're not supposed to make good this year. See, just as it's not a running block concept. Block assessment is there, but no block concept is there. Yes, yes. Yes. So you need to spread out your expenditure and ensure that every year you spread. It's like your LRS. If you spend 75,000 less in 1 year, you can't take credit for it next year.
Suppose we spend less, what are the penalties?
We'll come to that. Yeah, that will come to. What are the penal consequences? So that is correct. Currently there is no harsh penalty. But currently. How to spend? 5 ways in which you can spend. Going from left to right, easiest to toughest. Donate to Prime Minister or other relief funds set up by a central government fund. Donate to any NGO. Collaborate with other companies. Set up your own foundation, trust or section 25 or section 8 company and carry out activity on its own. The last yellow block is the toughest, the pink one is the easiest. Donating to Prime Minister's National Relief Fund or Central Government Fund. Easiest way to do business, no headaches, cut a check, you're done with it. Simply contribute to PM National Relief Fund. You can do so even on 31st March, 10 o'clock in the morning you realize CSR is not yet done. Write a check, end of matter. You get deduction for it and it's the total win-win situation. Everybody is happy, government is happy because they are getting money. Whether it will actually be done for CSR is another story altogether. Other central government funds set up for socio-economic development relief for SC, ST, OBC, minorities and women. So this needs to be notified by the central government that this is a fund set up for the same. No state government fund. So unlike in ATG where you have Central Chief Minister's Earthquake Relief Fund where you can contribute to, you're not allowed to do that for CSR. And you get tax benefits under section ATG for Prime Minister's National Relief Fund. We'll come to it when we come to the income tax section. Next easier way or the next level of toughness, donate to an NGO or a trust or a section 25 company which has got ATG or not, may or may not have got. It could even be an NGO set up by the company itself, by its holding company, by a subsidiary or an associate, or a totally unrelated NGO. If it is an unrelated NGO, then there is a caveat. It must have an established track record of 3 years in undertaking similar projects or programs. Experience in similar programs or projects as what? So if I want to do spending on education, then NGO must have track record in educational activities. If it is a medical NGO and I give it funds for educational CSR, that I believe will not be treated as CSR because it does not have a 3 years track record of similar project or similar programs. But what if it is a trust which has 2 activities? One it carries out health, one it carries out educational. And it has a track record of educational and I want to spend on educational activities. Can I give it? I believe yes, because it does have a track record of 3 years in similar programs. Look at a third scenario. The trust has some activities which are not covered within the CSR ambit of Schedule 7. But it has one activity which is covered for which a company contributes to it and for which it has a track record. Would it be covered? Does it have a track record in similar programs? Yes. However, I have understood from somebody who informally checked with the ministry officials, they say the trusts should have all its activities within Schedule 7. All of them must have a track record of 3 years. Only then can you contribute to such a trust. I do not see any such wordings anywhere in the rules or the act. If what I am contributing to the trust has a 3-year track record and if that is covered in the Schedule 7, I believe that's good enough compliance and you don't need to look at what else it does. But the view which they are taking is that not only must he have a track record here, all his activities must fall within the purview of the 10 activities which have been listed and he must have a track record in all of those. Only then could such a trust be used. So they are reducing the scope of NGOs which is available, which I believe is a wrong move to be taken.
No, he mentioned the company can execute the activity itself.
Yeah.
Now, that would not work even in a company, you need an organizational structure.
Right.
So company sets up a society or a trust.
Correct.
And do the CSR activity. Now the second condition is 3 years.
That is only for external NGO, not for company setup.
But ultimately, if a company sets up,
See, yeah.
it will be either a trust or a society.
But it's not external. One set up by a company does not have track record requirement. If you are a company and you come to me, I am an independent party. I have not been set up by your company. Then you have to look at whether I have a 3-year track record. But if you set up an external trust, a Section 25 company, that does not need to have 3-year track record.
And the initial period that money will be contributed for capital expenditure.
Yes.
So I want to set up a school. The first requirement is to buy land.
Right.
Next requirement is to build the
Yes.
and then the 3rd year, 4th year, maybe after I get all the
Correct.
bodies approval, then we can start the activity.
Right.
The capital expenditure will be covered.
CSR is covered. Even capacity building will be covered as well. Yes.
There are trusts which have been engaged in formal and informal education. The definition is about education or both or
When you say informal, you mean vocational education?
no, other than the informal cases, if you refer to the couple of last judgment which has come, even various religious trusts also has got the meaning of an education.
I don't think if you look at the CSR schedule, religious trusts would be covered because they say educational, vocational skills, that's capacity building.
Under 250 they have been considered.
But that is under income tax. I am talking the CSR schedule under Schedule 7, the 10 items. That does not cover religious in any manner. And I don't believe religious trust would be covered unless it is carrying on some activity like ISKCON. It is carrying on food relief programs. So if you are using for preventing hunger or malnutrition, then that is covered. But if you give that for ISKCON, the main religious activities, whether that would be covered looks difficult. So what is so under 215 and 80G is not necessarily so under CSR and vice versa.
What about the yoga training, where they train the yoga
Yeah, so rural sports,
instructors?
whether it is training to promote rural sports, if it is, then it is covered. That again, the training to promote is something which is in a little bit grey area, but otherwise yoga is a rural sport. Is it a rural sport? I don't think so.
Can be as a preventive.
Preventive healthcare, yeah. But that also, see, now we need to be innovative, so we need to see how. If it is to cure ailments, then no. But if it is to prevent, then yes.
There is another question. What about the cataract operation?
That is not preventive healthcare.
It prevents the blindness. If you don't remove the
But you have got the ailment and then you are carrying out. You have two ailments. One is blindness, other is cataract.
cataract is a natural thing.
Yeah, but that is,
Then it leads to blindness.
but it is not, I don't think it is preventive healthcare.
In that case, all illnesses.
Then otherwise everything would be a prevent, because everything ultimately leads to something, But that's why this needs to be opposed, and that is exactly what the Delhi High Court is hearing currently. But how can you have something so stupid by taking out something so basic? And I believe that blindness, cataract, deafness, there's so many things which we can do in CSR. Why should it be taken out? Yeah.
If, as we were discussing, that 2% is the, you cannot carry forward. For example, if a company decides to open education institution, right, and it requires a lot of money, rather than, spending it, we can take a loan from a bank, and the repayment can be towards the repayment of the loan taken for establishing the education institution, and which will be more or less equal to 2%.
No. I don't think that would be covered because you are not spending it for these activities. You are spending it for repaying a loan. That is
for
But it's not directly or indirectly. They have given you 5 ways. Now you can't look at a 6th way of what we want to look at. So if it is an NGO or a trust, you need to monitor how they are using funds, etc. So how does it work? Company donates to a trust, which is a Section 25 company or a trust set up by itself or an external NGO, and this carries out charitable activities covered under 135. Yeah.
You have to control that charitable.
No, you don't have to control it. There's only a monitoring requirement.
What is the monitoring?
Company must specify the project to be undertaken by these entities with the funds contribute, specify modalities of fund utilization, and have a monitoring and reporting mechanism. They've given you flexibility to have the monitoring. So you.
They are spending on it, how you have to monitor.
So that's where the last line is there. Have a monitoring and reporting mechanism. So they need to report to you. This is what I've done, and then you may have an audit done.
They don't use it. Is there any? They don't use it.
The trust does not use it.
So they put a particular year. They will use it.
So then you may, but then you have done your job.
Yeah.
See, you don't have to see what he has done forward, whether he can accumulate, but you cannot accumulate. So your question of carry forward can be addressed this way. Pool includes CSR. Two or more companies can come together and decide to do CSR jointly. So something is too big for one person to chew on. So you may go to 2-3 other companies and say, let us jointly do it. In which case we will have different roles and responsibilities. You do this, I do this, and it's jointly we can do a big project. Here the CSR committee of each company must be able to report separately on what they have done for that project, and the role of each company should be laid down for inter-se allocation. But here again very important, 2% for each company, not 2% aggregate. So you can't say out of 2%, 1.99% one guy did and 0.1% I did. So within a group, parent and subsidiary cannot come together and say parent did 1.99, I did 0.01. It is 2% for each, and within that how they handle their roles and responsibilities is up to them. Now, if you are doing own CSR, as Tarunda was asking, that you need an organization, etc. So they are even allowing you capacity building for CSR. You can spend on staff, implementation agencies, if you are setting up your own CSR unit for carrying out CSR, but it is only 5% of the 2% which you can spend. So 0.1% of your spending you can use for capacity building, hiring people for CSR within your organization, etc. Total should be maximum 5% of total CSR within 1 year. So that's 0.1%, 5% of 2%. Foreign company, interestingly they even covered foreign companies within the scope of CSR. How much time? 11:15. So I guess we'll skip foreign companies. I'd like to touch upon the tax issues which are more important. Okay.
Education, say computer literacy. And those people who come, you may charge a nominal fee, but the subjects are going to be totally different.
You may charge a nominal fee, but then that fee should again be used for CSR activities. No surplus. Seems you can, but there is a big question mark whether you can charge or everything should be free, because sometimes you need to charge to expense your costs. So, what is free? Correct.
Donations to these cancer organizations and all will not fall.
Will not fall. Unless it is covered within preventive healthcare.
If you donate to CAPA, then yes.
What is CAPA?
That is cancer awareness program.
Awareness, yeah. Not cancer AIDS program. So if you are giving an aid to cancer patients, that is not covered.
That might be a case where a trust is carrying out different kind of activities.
Exactly, that's what I said, that the ministry's view is that all the activities should be covered within Schedule 7. I don't believe. I believe only the activity which I am contributing to should be covered within Schedule 7, and he must have a 3-year track record for that.
For example, if I am contributing to a institute, a cancer institute, I mean institute may be carrying on awareness as well.
Right.
I am not buying for what activity I am only donating towards cancer. It's not specific whether I am doing for awareness or...
So you have to specify I am doing for awareness in my view, and you must, in the monitoring mechanism, tell them that you must use it only for awareness, not for treatment.
That might not be feasible all the time, right?
Well, then MCA will look at it unfeasibly. See, you have to look at your point. It is feasible. Why is it not feasible? They can have a distinction between awareness and treatment. You give him a clear-cut guideline, and he must give you a report that I have used it for this purpose. That is the preamble on which I am giving you the donation.
Like 18, you can donate to the corpus.
Yeah, corpus or income.
Otherwise, in the previous way, when you say capacity building, does it mean to the admin expense?
Does it mean?
To the administration expense?
They say staff and office expense. I believe even some sort of admin expense should be covered. Because otherwise, how do you carry out your own capacity building?
But then how do you calculate 5%? What if your expense goes beyond 5%?
Then it is not CSR. You can spend more, you spend more on it, but then it is only treated as CSR up to the level of 5%. So we'll skip this foreign company thing, because I guess we have a little less time. We'll go into tax benefits, which is quite important. Do I get a tax write-off for the CSR spending which I do? Is it an appropriation of profit and hence not allowable? Is it an overriding obligation created by law, although computed with reference to profits and hence allowable, which is what I feel it is? Is it a deduction allowable under section 37(1) under principles of commercial expediency, which again I feel it should be available? The draft rule specified that tax deduction would be notified by CBDT. This line has been deleted in the final rules. So what does that mean? Does it mean CBDT is not going to allow at all? Is something which we need to look at. Now let us look at some examples based on cases which have been decided where CSR has been allowed under 37(1) and has not been allowed under 37(1). First, let us look at some cases where they have been allowed. In a Bombay High Court decision, payment to a hospital based on the turnover of a company was allowed as a deduction, since in return hospital gave free treatment to the employees of the company. This was payment made to Bombay Hospital, and one of the mills said, I will contribute 0.2% of my turnover to you, corpus donation. In lieu of that, you give concessional or free treatment to my employees based on their grade, in addition to the other free patients which Bombay Hospital treats. Bombay High Court said no direct nexus, yet this was allowable as 37(1) deduction because indirect benefit was coming to the employees. Now under CSR, you cannot give anything which exclusively benefits your employees, but they can be incidental beneficiaries. So if such a thing were to happen under CSR and I tie up with a hospital and tell them you give health checkups, which is preventive health care, to my employees and to others, and for that I am contributing, this is one judgment on which you can rely and say that give me a deduction under that. But of course these are all quite old decisions. How courts would currently look at is another story, but this is something which you need to make out a case based on the facts and circumstances. But not only giving benefit, that's what I'm saying. You don't cap it as only my employees. You give everyone, including my employees. That there is no restriction. Payment to a trust which ran a school where employees' children also studied. Here again, Mahindra's case, Bombay High Court has said predominantly staff welfare, deduction available under 37(1). This is a very path-breaking decision of the Karnataka High Court in Mysore Kirloskar, and I believe after Supreme Court in escorts a little bit dicey. We'll look at why. They gave a donation to a school which was in the form of a trust set up by the company. So the company set up a trust which ran a school. The employees' children also studied there, not only studied there. They got 80G for making the donation, and they also claimed 37(1) for making the donation. The Karnataka High Court said 80G and 37(1) are mutually exclusive, both are available. The fact that others also take benefit is not material. It is for the purpose of business, not restricted to earning profits alone. Commercial expediency must also be considered for 37(1). A very important decision of the Karnataka High Court, Mysore Kirloskar, I think 166 ITR, where they have given both 37(1) and 80G. In this Madras High Court decision, payment to a Gram Panchayat school where company's employees were given preference. So here they were given preference in admission. So if there were 2 seats and one only was vacant, the company's employee would get a preference. The Madras High Court said it generates goodwill for the company. Fact that general public also benefits is not material for claiming deduction under 37(1). And Madras refineries, Madras High Court decision directly seems to be on the point. Company gave aid for drinking water facilities to poor in the vicinity of the factory. It said it is a goodwill gesture as a good corporate citizen since it was in a polluting industry, and corporate responsibility is also a factor in considering 37(1). So this seems to be directly relevant for CSR, Madras refineries, Madras High Court. However, in another year of the same SSC, the Supreme Court has set aside and remanded the High Court's decision and sent it back to the tribunal on the fact that did not find any fact whether aid was actually given to residents living in vicinity of factory or was it given to everybody and anybody. So on this fact, Supreme Court has remanded the matter back to the Chennai tribunal. After that, there has not been any hearing forward on that. In this one, Rajasthan High Court decision, construction of a fountain on a traffic island allowed as advertising expenditure even though far from the place of business, because they said it generates publicity for the company. Again, aid to school where employees' children study, not necessary that entitled to whole benefit and nobody else must share such benefit. Fact that somebody else also benefits is not a problem. This is Rain Bakshi, similar to somebody who was asking about pharma companies. Rural development expenditure of providing medical aid to poor allowed as an advertising expenditure to a pharma company since it generated goodwill and promoted indirectly the company's products. Now this has been taken away unless it is preventive healthcare. In HPCL, Mumbai Tribunal has said expenses on 20-point program at the instance of government is allowable since done as a responsible corporate citizen. I believe this principle should be applicable even for CSR because it is being done at the instance of the government and there as a responsible corporate citizen. This is a Mumbai Tribunal, Hindustan Petroleum. So that should be an principle. And the last one is Ahmedabad Tribunal in Librezol, that is last year only. Community welfare expenditure for employees, children and others in terms of a school building and toilets for villagers near the factory is treated as good corporate citizenship. So these are all examples where the courts have allowed deduction under 37(1). Where are they not allowed? Bombay High Court has been at the forefront in not allowing Standard Mills and Voltas, expenditure for Bihar flood relief by Tata Motors and Voltas, and social welfare disallowed. Theory that long-term benefits to company is too far-stretched. They said there will be long-term benefit in the form of goodwill and good corporate citizenship. So Bombay High Court said that's too far-fetched a theory. You cannot get deduction under 37(1) unless you prove that the payment is actually business expenditure. So this was something which was a negative which has been used again in Standard Mills by the Bombay High Court. Free eye camp. Somebody was asking about.
The only thing will be these are the cases where the expenditure was voluntary.
Right.
Now that there is a bigger compulsion on me.
That's what I'm saying. It should be that. This is the one. This is the one which may be relevant. Expenses at the instance of government. PSU being asked to comply with it under the PSU corporate social responsibility guidelines. There they said it's done at the instance of government. Hence, it's allowable.
But now there will be administrative instructions.
No, they are PSU guidelines which have been followed by all PSUs. Additional, free eye camp organized for, this was a cataract camp organized for workers and outsiders. So the Punjab and Haryana High Court said you have no records of how many employees attended, how many outsiders, hence ad hoc 50% disallowed. No logic as to that. They said only what is done for the employees is allowable. This is Atlas Cycles, Punjab and Haryana High Court. There's too many citations, too many judgments, and that unnecessarily clutters but we can look at it separately. Aid to school where employees' kids also studied and hospital where employees' kids also got treatment. Benefit, if at all, to employees was quite remote, hence totally disallowed. So in Punjab and Haryana, they at least ad hoc, here totally. In this one company, a mining company took up community development of religious functions, art and craft, etc. They said no benefit with the company's line of activities, hence totally disallowed. And cultural events for differently abled children, no nexus between company's business and that, hence totally disallowed. In any event, would it be allowed as a deduction from book profits? Yes. And hence for computing MAT, it is definitely a deduction because CSR is to be reduced from P&L and hence your book profits go down. Can I get a double deduction under 37(1) and 80G? Now that's what Mysore Kirloskar Karnataka High Court says yes. But if you look at Escorts 198 Supreme Court, there it was a case of capital expenditure and the company wanted to claim 35 deduction as well as depreciation under 32(1). Supreme Court said no double deduction with respect to the same business outgoing unless expressly permitted by the statute. Two allowance cannot be and are not intended to be granted in respect of the same asset or the same expenditure. Looking at this logic, it appears you cannot both get 37(1) and 80G for a CSR if it is otherwise available. But this is something which courts will have to take a call. But this Escorts came after Mysore Kirloskar, so we don't have a decision before Escorts, after Escorts, which has taken the same double deduction view.
But maybe because all those C5 sets are very special exclusion that if something is 100% allowed to use, no depreciation will be allowed.
That was not there earlier when this came. I think it came afterwards based on Escorts. Because otherwise the matter would not have travelled all the way only.
Sir, in this capital expenditure, old age and all those residential premises, whether I can claim the depreciation?
I think there is a good case to say it is for business, but whether you are putting it used for your business, in a way, yes, because otherwise, because the company is active mandating that if I want to do business, I have to do this, so hence give me depreciation. I think this is something where we would need to develop an innovative thinking at the part of the judiciary. If they yet stick to that business means it must benefit me alone, then no. But if you look at all these illustrations where others have also benefited, courts have taken a view that yes, you should be entitled to. It will be. I am not saying maybe. I am saying it will be. And some higher forums will have to take a view on them. Definitely not at initial levels.
How the accounting treatment you take this? Suppose now 2014 accounts when I am preparing.
14-15.
No, 14 accounts.
There's no liability in 14. It's from 1/4/14.
Not 14, but I have to consider 3 years.
Only for computation, not in accounts.
Not in accounts.
No. It starts from 1st April, from Tuesday.
But I had to calculate
For computation you only, for only the figure, not for any impact in the accounts ending on Monday.
whether I have to prepare a result type of
No. It's with effect from 1/4/2014.
which I have. The effect from 1 from 14, right?
For
I had to spend that money in that year.
in that year. Computed with reference to previous year. So only for computation for your work.
Where I have to debit that?
Here P&L.
P&L. See for CSR.
CSR expenditure. We'll come to accounting entries also.
So doesn't that mean there is a direct conflict with income tax and CSR?
There is a direct.
CSR says that the company shouldn't benefit. And income tax liabilities, if it is a benefit to the business, then they allow it as a deduction.
There is an indirect benefit to the business. Promoting goodwill, good corporate citizenship, all those are also benefits, which are okay under CSR also.
Most of the benefit or most of the decisions where they are allowed, there are employee benefits.
Not all.
But most.
But you can have them. No? See, all CSR is saying employee only is not permissible. Employee also is permissible. So then do have employees. That will create goodwill for you also. ATG available to donation to a trust setup? Yes, if set up for charitable purposes, and here the definition under ATG is relief for poor, education, medical relief, preservation of environment, preservation of monuments, art, history, advancement of any other object of general public utility. Control, supervision, regulation of notified games and sports should not be for the benefit of any particular religious community or caste. If it is for the benefit of SC, ST, OBC, women and children, then it is not treated as for the benefit of any particular religious community or caste. Now, if I were to set up a trust and get ATG registration for that, would it be possible and then also carry out CSR through that? So say hunger, poverty, malnutrition. Does it fall within the ambit of ATG? Yes, relief of poor. Promoting education, so there is also education. Gender equality, empowering women. Explanation one says benefit of women, children, OBC, not treated as for benefit of any community, hence covered. Environmental sustainability, preservation of environment and wildlife is covered within that. Protection of heritage, art and culture, so there's preservation of monuments, place of art and history. Benefit of armed forces, there is no reference in ATG or 215. And it also, I don't think is general public utility. Of course, we have Arvind Bhai's expertise here. Whether armed forces alone would be general public, because it's not general public, it's a very small section of public. Hence,
Sufficiently voiced.
but can you not say it's not general public? Means you're only distinguishing only army. I mean, I don't know whether that alone would be wide enough to identifiable class. So that would be covered. Promoting rural sports. Exploration 4 says promoting of notified games. So the games which are notified would be covered. Rural development projects. We have relief of poor, education or medical relief. So if it falls within any of these, then yes, it will be covered. Preventive health care, if it is medical relief, yes. Sanitation and drinking water, relief of poor. Old age home construction, daycare centers, helping destitutes, it is treated as general public utility by various decisions. And public libraries can also be treated as general public utility. So it's very wide, and ATG in most cases would be available or should be available if you set up a trust to carry out CSR for this and donate to that. Now tax treatment of each of the modes. If I carry out my own activities, yeah.
The sanitation clause, this company like Syntex Industry, they are spending a lot of money in mobile toilets at Kumbh Mela. Will it be
Definitely.
religious or
No, but it's sanitation would be relief of poor or general public utility.
specific to Kumbh Mela?
But it's quite wide. I mean, anybody who comes to Kumbh Mela, you're not saying only Hindus coming to Kumbh Mela. If you have such a clause, it may be, no, so then I believe it should be.
Trust, ceiling of expenses or salaries is like 5%.
Correct. Then there's no limit for the trust. You have to donate to them and say that you use it for these purposes. So if I carry out my own activities, no clear-cut tax provisions, whether I get a deduction under 37(1), whether I get depreciation under 32(1) for capital expenditure. If I contribute to PM's relief fund under ATG, 100% deduction, no limit of 10% of adjusted total income applicable to the company that is to the donor. If I donate to any other NGO or Section 8 company, which is what Section 25 companies will be now known as, then if that entity has obtained ATG, then I get a 50% deduction up to 10% of my adjusted total income under Section ATG. And same is the point if it is my own set up by me, a trust or a Section 8. And if I do pooling of CSR activities, there are no clear-cut provisions as to how the tax benefits, but that will be same as whether I do it myself or I do it jointly. There's one additional clause which we can look at, 35AC. Contribution to an eligible project or scheme notified by central government, approved by National Committee for Promotion of Social and Economic Welfare and Upliftment of Poor, including affordable housing. Here you get a deduction exactly under 35AC, don't need to go to 37(1), and there are foundations like Lupin Human Welfare and Research Foundation, which carries on rural development. That is exactly a CSR project. It is eligible under 35AC. You can give a donation to that and you will get a deduction. Or ISKCON Food Relief, HelpAge, Dignity Foundation, all of these have been notified by CBDT under 35AC, and if you contribute to them for their specified projects, then you will get a 35AC business deduction. What is the board's duty? 5-step. Appoint a CSR committee and give its composition in the Board of Directors report. Notify the CSR policy in your report and on your website. Ensure that the CSR policy is implemented. Ensure CSR spending at 2% of the average net profit in the 3 financial years. Give preference to local areas of operation and give reasons in your report if you spent less than 2%. So this one is important. The disclosures I just outlined, these are all reporting requirements. I wouldn't be going into them. Now let's go to the key reporting requirements. In the P&L, Schedule 3, which is the new Schedule 6, expenditure incurred on CSR activity needs to be disclosed in notes to account. Nothing more to be disclosed in the accounts. No breakup, no where you spent it. All that comes in the Board of Directors report and the website. Only clauses surplus is not treated as profits of the company. So if you get a surplus, should you create a reserve for that, a CSR reserve, and use it for CSR activities in future? That's something which needs to be examined. I do believe you can create a reserve for CSR, but then every year you need to contribute, that's additional. So this can be an extra over and above what you have to spend every year. Other compliances, the annual return which you need to file, you need a CSR disclosure of the amount spent during the financial year and the amount spent as a percentage of a block of 3 financial years. And in addition, the listing agreement of SEBI for the top 100 company carries a business responsibility report, a BRR, which is already in force. It requires you to give the CSR spending as a percentage of the current year's PAT and the activities on which CSR has been done. This may require a little bit of modification into, say, a percentage of average PAT, now that it is based on average PAT. But this is already in force, and even if you look at 2013 annual reports of the top 100 companies, you will find the BRR. What is the penalty? This is something which has been the biggest question mark. What is the penalty for not complying with the law? Substantive failure. What if I don't contribute at all? I have 2%. Is there a penalty, or is it only naming and shaming? That is, I need to disclose that I have not contributed, and that's the end of the matter. There is no specific penalty provided under 135 or under the Companies Act. Could the general penalty clause under the Companies Act be invoked? On the company and officers in default, there it provides a fine of up to 10,000 rupees, and continuing offence after the first fine is 1,000 rupees per day. But there is no imprisonment, which is very common under the Companies Act. So therefore, at best you could have a 10,000 rupee penalty under the general penalty clause, but other than that, even if you look at the entire act, there is no penalty for any substantive failure other than you have to report that there has been a default in compliance with the CSR policy. If it's a reporting failure, and this is very interesting, I failed to report the CSR policy in my board of directors under section 134(3) subclause O, and I don't give a report for underspending, then there is a penalty in that section on the company of 50,000 to 25 lakhs, every officer in default, imprisonment of up to 3 years, and fine of up to 5 lakhs. So if I don't spend, it's okay, but if I don't say why I didn't spend, it's not okay. So this is what it is, that you can do away with not spending, but you cannot do away with not explaining. So they want you to explain why you did not spend, and if you don't, there is a very large penalty. Thank you very much, friends. If there are any more questions, I'll be happy to answer. Sure.
It's regarding the profit. Suppose you are loss-making company, you go for OTS and restructuring, and because of that effect or interest profit, you have the profits. In that case also,
It will apply. They have not defined net profit.
and if there are certain conditions made applicable to you by the institution or bank or by CDR, in that case, who will prevail? The Act or
The Act will prevail.
one side they will prevent you from
Yes.
Then I have one or two apprehensions. I'm just sharing that this may lead a dispute with your union because you are spending on CSR. They also may demand. Then there can be arm twisting by political parties. Then in our articles, you always used to study the balance sheet by starting a body audit. So here also they will be looking at in your balance sheet what is CSR amount or CSR balance unspent.
Sure.
Then they will come and do the arm twisting.
Sure.
And one of the observation, should it not be made applicable to the incremental wealth creation by all our MPs and MLAs? They should be eligible only if they spend 2% of that which election.
Yeah.
Now there are provisions of reopening of books of accounts also. So if my profit changes due to this, what the impact it will have on?
Well, I don't think anything could be done because you have to spend it in that year. There's no fallback provisions.
These emphasis on spending and not on outcome.
Yes. Correct.
One case was concerned when they had a rural development, 35 CCA, etc. And so many schemes and standards taking place. They are on the one hand they want to promote charitable activity, on the other hand they are giving money taking 11.
Right.
Where is the policy?
Correct. That's true. Sorry? No. Well, the board of directors are supposed to disclose certain things. Outline of CSR policy, your average net profit for last 3 years. So that's in the board of directors report it will come.
Directors report has to be proper working 198.
No.
But how the regularity will come to whether it is a correct figure?
Then when he comes for inspection, he will ask for it. Yeah, all that is separate. That is separate. If you want, you have to get registration under them.
What is the auditor's liability of this?
Auditor's liability is quite simple. See, accounts, there's only one P&L statement. Expenditure incurred on CSR activities to be disclosed in notes to accounts. Nothing more to be disclosed. That's it. You are not auditing the board of directors report. Yes.
If the company donates to the trust accumulates.
Company will have to monitor and report, but then trust cannot accumulate. So what is it doing? If it's supposing it is spending in installments, like he gave that example of old age home, where there is a gestation period, then it is fine. But if it is just accumulating and then investing in mutual funds and FD, then it's not fine. Yeah. Beyond the, right. Sorry, come again. Branch or project office. Now what is branch and project office? I think we'll have to go back to FEMA and look at that. Because they have given a very cursory definition. Branch means anything called a branch. What does that mean? So I guess you need to look at the FEMA establishment of branch or project office regulations to decide whether it is a branch or a PO. They have certain reporting requirements also. Yes. I've skipped that, but it's there in the presentation. Yes. Net profit before tax. In my view, before tax. They're not given any clarity. I believe it's NPBT.
And when spending, it is net profit
before tax.
Average net profit calculated in accordance with
198.
But that can be calculated only after the financial year.
That's why it's preceding financial 3 years. The threshold is current, calculation is preceding. So you have to take last 3 years block, not current year. Yes, even for this. Yes. Yeah. Last 3 years ending on 2000 March 14. Yes. So can you just speak a little louder? I'm not able to hear. Yes. That's what I mentioned in the beginning of my talk, that unless you are in a touch and go scenario, that is you are at 5 crores or 4 crore 95 lakhs, if you know you are going to be covered, you would have an idea somewhere mid of the year, then you need to start spending. But the problem would be if I am at 4 crore 95 lakhs or 5 crores, then I do have a problem. Then Prime Minister's National Relief Fund will come to your relief. Committee you can at least keep and be ready. There's no harm in forming a committee.
Branches are applicable, they won't have a board of directors over here.
So that's why I just said you have a person which you have to nominate under 560 and any other person you can have as a committee. They address that in the rules.
But for a year, there should not be any problem because only you have to report that we have not spent.
In all years you have to report you have not spent. There is no penalty for...
Subsequently,
it may come through rules.
Few years, there is no problem.
Correct.
What is the role of an auditor in all those CSR?
That's what the gentleman just asked. There's no role. You only need to specify in the notes to accounts what is your CSR expenditure. Nothing else.
There is, I think, case with everyone. Not like it is saying whatever going on in the annual report, the auditor must check the whatever the
He cannot comment on the board of directors report or anything. All he has to see is in the notes to account.
facts which is being provided in the annual report, the auditor must check, I think.
He cannot check the board of directors report.
Basically, I think what you are referring to is an auditing standard where contents of the audit, the annual report have to be seen by the auditor that they are correctly reflected. That is what he is.
But that would be, as long as you are reflecting in the notes to accounts what is your total CSR expenditure. Beyond that, what else will you see? I don't have any response.
I think thank you very much, Anup. I think it was a brilliant presentation. Not only brilliant, it was very lucid. And I think none of us would have imagined that there could be so much of issues, so many issues in CSR. And not only it was brilliant, but it was very well researched, I would say. And all the issues, I think, whatever possible in CSR you have covered. Thank you very much. request Mitesh to present a formal vote of thanks.
Thank you, Vipul bhai. Friends, CSR is the most discussed and talked about topic since the company's bill was laid in the parliament. And I think Anup bhai has very nicely covered many important aspect of the CSR, and especially that research part, initial research part. Thank you, Anup bhai, for sharing your views on such an important topic and sparing time on Saturday morning, especially last Saturday of the financial year. So I, on behalf of Chamber of Tax Consultants, propose a hearty vote of thanks and request you all to carry out the bill.